My dear friends, a very warm welcome to all of you to this session entitled Mind the Gap. I'm sure all of you must be wondering as to what exactly we mean by this term, mind the gap. Our endeavor today shall be towards enabling you to both appreciate and understand this term. But before we go there, let us first try to understand our business. I'm going to show you a few visuals. The first one which you will see now is Colgate frozen food. Here's the next one. It's called Pond's toothpaste. And the third one says Frito Lay's lemonade. Many of you must be wondering, why am I showing you these images? Is this a joke? Some of you must be wondering, do these names actually exist? Or am I just showing you? Some of you may say, yes, I have seen them. Frankly speaking, if you Google for failed brand extensions, you will in all possibility come across these three names. All these three products were launched, but they failed. Wonder why? Pond's, Colgate and Lay's. All these are big brands, trusted brands, well-known brands. But what do we know them for? We know Pond's for cold cream, not toothpaste. Lay's for chips, not lemonade. When we get up every morning, Colgate is for toothpaste, not frozen foods. These brands were known for their core business. Moving away did not help much. But now is the time to understand what is our core business. Look at the slide here. What does it say? We all know we are in the business of life insurance. And what do? In the word life, there are two alphabets called I and F. Ifs. We cover the ifs of life. Before we move on, let me tell you a very interesting story. This story is about Sisyphus. It's a story from the Greek mythology. You must be wondering, who was Sisyphus? Sisyphus was the king of Corinth, a kingdom in Greece. हम हिंदी में बोलते हैं ना, दुराचारी राजा. Sisyphus was a durachari raja, a very evil king. He was so evil that the Greek gods decided to punish him. So what did they do? They came down to earth, took Sisyphus to the edge of a jungle and made him stay in a hut next to a hill. And his punishment was to roll a boulder up the hill every morning and to make sure it reaches the top of the hill by the time sun was down. But every day the gods used to ensure that before the boulder reached the top of the hill, it was rolled back to the bottom of the hill. The whole life, Sisyphus had to keep doing this as a punishment. The boulder kept coming down. Our life is very similar to Sisyphus. Let's see how. The boulder which you see in Sisyphus' story is the life's monetary problems which each one of us go through. The hill in Sisyphus' story represents the hill of life. We pass through various stages in this hill of life, starting from the level of charity, moving on to a stage of getting by, to being comfortable, to being well off, to living a life of luxury. To reach the life stage of being well off and luxury, we have to push these life's monetary problems up the hill of life, just like Sisyphus had to push the boulder up the hill every morning. But just like Sisyphus' boulder kept coming down every day because the gods pushed it back, there are factors which impact life's monetary problems as well. These factors are primarily tax, inflation, disability, and death. It's because of these factors that sometimes the life's monetary problems which we fight to take up the hill of life can bring the same monetary problems down the hill of life. It is at this point that we all think, wish there was a stopper in my life. And this stopper is we life insurance professionals. This stopper represents Tata AIA Life Insurance. That's how our lives is so much to that of Sisyphus. I hope that this story makes you understand the importance of the profession we are in. By now, I am confident that you would have understood what our business is. We do sell savings, right? We also do sell investment. But is that our core business? Selling savings and investment? Our core business is selling protection. We are in the business of providing financial protection from the risks of death, disability, and illness. The question we need to ask ourselves is, are we doing that enough? Do we really understand the potential of this industry? Let's look at some real facts. According to a recent Swiss Re report, India has the third largest protection gap in the world after China and Japan. This gap amounts to, in US dollar terms, 6.7 trillion. And I hope you know that 1 trillion is 1,000 billion. If you translate that into crores and Indian rupees, it's rupees 367 lakh crore. What does this imply? This means that for every 100 rupees that needs to be spent on life insurance, only rupees 7.4 is spent in India, that too on a combination of insurance plus savings put together. Which means that there is a staggering protection gap, and this gap is of 92.6%. I draw the following inferences from these two data points which we have just seen. The first one is that there is a huge opportunity for each one of us, just waiting for us to tap. The second one is that each one of us, you and me, is contributing to that gap. And how are we doing that? We are not buying enough life insurance protection, and even more importantly, we are not selling enough life insurance. You will be surprised to know that the average sum assured of policies we sell is just 2.5 lakhs. 2.5 lakhs. In order to mind this gap, we need to start by asking ourselves the following questions as an insurance professional. The first question we need to ask ourselves, is 2.5 lakh enough to maintain a family standard of living in today's time? The second question, do we have enough insurance protection to ensure our family standard of life? When I say our, it's your family, my family. The third question, do our friends, relatives have enough life insurance protection? The fourth question, do our advisors, you, BAs, you, and our employees have enough life insurance protection? The last but not the least, do our existing customers, the ones we have already sold to, most probably a 2.5 lakh cover, do they have enough insurance? Let's look at what is coming in our way from asking these questions. I call them myths.
I don't need insurance. My astrologer has said that I would live long.
I'm very healthy. Nothing's going to happen to me.
I don't want to talk about death.
Why do I need insurance?
So, you must be thinking, I've heard these many times before. Haven't you? Let me tell you, I've been in life insurance for 26 years. And I've been hearing these for the last 26 years. But the realities are, however, very different. Let's look at the realities of life. 1 in 4, currently aged 20, will not live up to the age of 65. Every year in India, 6 lakh people die of cancer and 8 lakh people are detected with cancer. In India, the incidence of accidental deaths grew by a whopping 45.7% in the decade 1997 to 2007. more than 1.3 lakh people die due to accidents on Indian roads every year. Are these realities not frightening? Frightening realities of life, right? Yet I repeat, we on an average sell just rupees 2.5 lakh of sum assured. In most cases, this amount may not even last beyond the final rights or final expenses associated with an untimely death due to illness or accident. None of us want anything bad to happen to us or our friends or our relatives. But what if something happened? In situations like this, imagine if you were delivering a check of rupees 2.5 lakh only to the family. How would you feel as the family's life insurance advisor? The question we need to ask ourselves is, have we protected the standard of living of the people we love and care for? We are life insurance professionals. It's our duty to make our friends, relatives and acquaintances aware about the need of life insurance. We need to be able to assess their life insurance and calculate the gap. We need to show them this gap and try and convince them to reduce this gap by buying more life insurance cover. And we should do it with everyone we know so that the following of the three happens. If they agree to cover their gap, you can rest assured that you have done your bit to ensure their family's standard of living. If they agree to only reduce the gap, you know you have done part of your duty and have an opportunity to go back and cover the rest of the gap. If they do not agree, you will at least have the satisfaction that I tried. The objective of life insurance cover is to provide for a lump sum, which when invested in a safe instrument like a fixed deposit, will provide adequate interest income that will help maintain the lifestyle of a family, which we refer to as the standard of living, or SOL. To give an idea as to how much is enough life insurance, a 50 lakh cover will provide a monthly income of approximately rupees 20,000 per month to the surviving family of the insured at an assumed long-term rate of interest of 5%. We will cover these in more detail later. Now let's ask ourselves a question. Is rupees 20,000 per month enough in today's time to maintain the standard of living of families known to you? How many of your friends, relatives or customers have a 50 lakh life cover? Are you mindful of their gap? I am sure that by now you all would be convinced that the protection gap in India is huge. It's now time to mind the gap. I am sure you would be thinking, how do I find this gap? With which product do I fill this gap? While later in this session, we shall show you the tools that will enable you to find the gap, I am extremely happy to present to you our long-awaited new offering, Tata AIA Life Insurance Maharaksha Supreme, our new term plan with competitive rates and best-in-class features. I now hand over to your trainer to take you through the details of this exciting new product. Don't worry, I'll be back. See you soon. Hello once again, I'm back. So are you all excited with this great new product? I'm sure you will be. Now let's do a quick recap of the key features and benefits of Maharaksha Supreme. We all know price and buying decisions are closely related. We all know that the defining moment for a pure term plan is its premium rate. You have seen the premium rates of Maharaksha Supreme. It is one of the most competitive term plans for face-to-face sale in the industry. We have studied price points across industry for face-to-face term products at various age and term combinations. We have separate smoker and non-smoker rates. Across over 80% of modal points, that is a combination of age and term, our non-smoker rates are amongst the best three. We also have lesser rates for female lives. So, if you are a non-smoker and a female, you have the most preferred rate. You have also seen that for similar premium amounts, the protection available under Maharaksha Supreme are in some cases almost double that of the protection cover available under Raksha plan. Is that not great for minding the gap? And your favorite subject, commission structure. Even the commission structure is the most attractive possible. Compared to Raksha commission rates, are they not better? So guys, it's a win-win for your customer, more life cover at cheaper rates. It's a win-win for you, more earnings for the same premium. You have seen that this plan has two options. Option 1 is the pure protection cover, and option 2 is the extra protection cover, which has inbuilt waiver of premium benefit in case of total permanent disability. In my opening session, if you recollect, I had said that we are in the business of providing financial protection against the ifs of life. Option 2, with inbuilt waiver of premium benefit, ensures that we are providing financial security to our client's family against both the ifs, death and disability. I am sure that you would have also noticed that the additional premium to be paid in option 2 is minimal, and you get a 2% extra commission for the same. To offer complete gap protection, please make sure your client selects option 2. It is more prudent for the client and better earnings for you. The next important feature I want to highlight is the Life Stage Plus option. As is very evident, it talks about increased life cover across life stages. This feature, if chosen at inception, please remember you have to choose this feature at inception, will allow the customer to increase the life cover, which we call sum assured, by up to 50% of the basic sum assured in the event of marriage and birth of 2 children, subject to an overall maximum of 50 lakhs. What's more, for these increases, no fresh medical underwriting is required. We all know that with increase in financial responsibility, there is also a need to increase life cover. This feature ensures the same can be done without the hassle of buying another plan and having to go through medical underwriting once again. Please do not forget, once again I am repeating, please do not forget that life stage option has to be selected at the time of purchase only. So don't miss this. In your sales pitch, do highlight the payout accelerator benefit, which is available in both options and provides accelerated payment of 50% basic sum assured in case of terminal illness. You can also make the protection cover more comprehensive by attaching the riders available with this plan. While attaching riders, please remember, you can combine the ADB rider with ADDS rider, but ADB rider cannot be combined with ADDL rider. The riders make this a comprehensive protection plan. I am sure you will agree that your plan has every possible feature to make a protection sale easy, right? We have considered all your feedback in developing this plan, especially with regard to what was not there in Raksha and what is available in the market. We have given a wide range of terms, we have a wide range of entry age, and above all, we have also added the single pay option. What's more, we have surrender value factored in for single pay. Wow, is that not great? How the surrender value is calculated is given in the screen behind me. That was Maharaksha Supreme for you at a glance. Now, It's quiz time. So how was the quiz? Must have enjoyed it, right? By now, all of you must be really excited about reaching out to your friends, relatives and clients and help them mind the gap. The next obvious question is, how to find the gap? That is, how to calculate the adequate life insurance cover required by someone. We will be discussing two simple methods to find the gap. The simplest method is called the underwriting thumb rule method. It's a three-step process. The first step is to find the net annual income. For this, you need to deduct the annual personal expense from the annual income post-tax. In the second step, you have to find the multiple of income as per your age in the grid given in the slide. As you can see, at a younger age, we use a higher multiple. That's because one has more number of income earning years to protect and hence needs higher cover. In the third step, we multiply net annual income derived in step 1 by the multiple. This is the amount of life insurance cover required as per the thumb rule method. Let's understand this with an example. Rahul Goenka is 35 years old. He has an annual income of 5 lakh and his personal expense is 1 lakh. As per step 1, the net annual income is 5 lakh minus 1 lakh, which is 4 lakh. This is the amount that needs protection. As per step 2, we find that at his age, which is 35, the multiplier is 14. So in step 3, we will multiply 4 lakh by 14 and we get a figure of 56 lakh. Hence the life insurance cover required for Rahul is rupees 56 lakh. Simple? Let's practice then. Let's see who gets it first. By now, you must be feeling confident about the thumb rule method of finding the gap. This method is simple, but it gives an approximate figure. And it does not take into account debts, loans and EMIs. We all know that income needs to be protected. In life insurance, we also say that one needs to cover the debts first. So let's learn a slightly more detailed method to find the gap. I promise this would be simple too. This method, we have to master the art of asking the following 5 questions. So listen carefully. The first question is, what is your total monthly household expense? The second question is, what is the total monthly loan EMI you pay? The third question is, what is your total outstanding principal for the loans taken? The fourth question is, what is the long-term fixed deposit rate you expect on your corpus. And fifth question is how much life insurance cover you currently have. Let's understand the calculation with an example on Find the Gap calculator. Please ensure that you have got the handout called Find the Gap in your hand. The calculator is a simple one-sheeter, and if you just follow the steps one by one, you can find the gap easily. Let's work on an example together. I have with me Sanjay Mukherjee, and I will take you through this gap calculator with Sanjay. Sanjay, what is your total monthly household expense?
60,000.
Okay, thank you. What is the total monthly EMI you are paying if you have any loans?
20,000.
So now we will calculate the net monthly household expense is 40,000, which is the monthly household expense minus the EMI. So you must be wondering, why did I subtract the EMIs? Please understand, when we cover the gap, we ensure that the debts are also covered. So if the debts are covered, in case of death, the loan will be repaid from the corpus. So the EMIs will stop. Therefore, EMIs are always reduced from the monthly household expense. Okay, after we have done, now we know that the net monthly household expense of Sanjay is 40,000 rupees. So the net annual household expense would be 40,000 multiplied by 12. So that comes to 4,80,000. Now we'll ask the third question to Sanjay. Sanjay, what is the long-term fixed deposit rate you expect on your corpus?
5%.
5%. So the cover required to protect the net annual household expense of 4,80,000 is 4,80,000 divided by 5%, which comes to 96 lakh rupees. Now I'll ask Sanjay the fourth question. What is your total outstanding principal for the loans taken?
18 lakhs.
So as we said, we have to take life insurance for the income we have, and we need to cover the debts. So the life insurance requirement for covering the income was 96 lakh. His outstanding loan or debts is 18 lakhs. We have to add these two and it becomes 1 crore 14 lakhs. Now the last question. How much life insurance cover you currently have, Sanjay?
8 lakhs.
So the total requirement was 1 crore 14 lakhs. He already has 8 lakhs cover. So what's the net life insurance cover required by Sanjay? Is 1 crore 14 lakhs minus 8 lakhs, which is 1 crore 6 lakhs. So this is the gap in Sanjay Mukherjee's portfolio. Is that not simple? Now let's get down to doing some more examples on your worksheets with your trainer. By now, we all have understood the following. Potential of protection sale in India, the India protection gap, Maharaksha Supreme product feature and benefits, and how to calculate the protection gap of a client. The next question is, who to approach? That brings us to the target group definition, or what we call TGD. The basic premise of life insurance is, if there is income, it needs to be protected. Our target group for protection sale is between age 25 to 45 with an average annual income of rupees 3.5 lakh or more. Let's understand the life stages and needs of our target group. The first group is young and unmarried in the age group of 25 to 30. At this stage, people start earning, may have dependent parents and siblings, and also start saving for future. As the age increases and life stage changes, the responsibilities and the need for insurance increases. Let's see how the Maharaksha Supreme with riders can be pitched to various groups of our target audience. Now let's look at the features of Maharaksha Supreme, which will help us position this product amongst the women's segment. Premium discount on female lives. Comprehensive coverage to protect family standard of living at very competitive premium rate. Easy loan processing due to life insurance coverage. Ability to afford best treatment in case of surgery. Option to increase life insurance cover at different life stages without medical underwriting. Financial independence in case of critical illness. Availability of lump sum amount for treatment. Now let's look at the features of Maharaksha Supreme that will help us position to one of the most important segments for life insurance, married with family. Comprehensive coverage to protect family standard of living at very competitive premium rates. Easy loan processing due to life insurance coverage. Protect family standard of living in case of critical illness and surgery due to the availability of lump sum amount for treatment. Now let's look at the features of Maharaksha Supreme that will help us position this product to the young and unmarried. Ensure insurability at very low cost for a longer term. Option to increase life insurance cover at different life stages without medical underwriting. Financial independence in case of critical illness. Availability of lump sum amount for treatment. And ability to afford best treatment in case of surgery. I'm sure that by now, you must be raring to go out and meet your prospects and existing clients to calculate the protection gap, presenting them with this wonderful solution called Tata AI Life Maharaksha Supreme. You are armed with two tools by now, Find the Gap Calculator and Tata AIA Life Insurance Maharaksha Supreme. The good news is, I have two more simple but great tools for you which will help you win over clients and manage their objections as well. Your trainers must have handed over these tools to you. Let's look at each together. The first tool emphasizes the concept of standard of living and the need for protection. For people who believe they have enough insurance, you can at a glance show what is the monthly income they can expect from a life cover of 50 lakh or 1 crore. It will help you convince them the need to have at least 50 lakh cover or more. The obvious thought process at this point in the customer's mind would be the cost. When you turn the tool, you will get the premium rates for some sample age and term for a 50 lakh and 1 crore cover for both options of the plan. This tool will help you handle the apprehension regarding affordability. But these still remain.
Why do I need insurance?
I don't want to talk about death.
So you have heard the myths again. Now let's look at the second tool in your hand. This tool is called Mind the Gap tool and will help you address the myths which you just saw again. Here we give figures that say that for every 100 rupees required for protection, only rupees 7.4 is spent on it. There is a 92.6% protection gap, which is most likely true for majority of our customers. As you turn over, you get the realities we spoke of earlier to address the mindset that nothing wrong can happen to me. Let's see a role play to understand how to use these two tools in a call. After you see the video, you must take time to practice yourself. Remember, practice makes a man perfect.
Well, Mr. Ram, first of all, I would like to thank you for the appointment.
Okay.
This is my visiting card, and you can see I'm working as a senior advisor with Tata AIA Life Insurance Company.
Right.
This is my mobile number, and most of the time I'm in field meeting with customers. So the best way to reach me is call on my mobile.
Okay.
I've been working with this company for more than 3.5 years now. And on a personal front, I'm a science graduate and I'm married, and I have a son who's just completed 4 years of age.
Oh, that's great.
Can I know something about you, sir?
Yeah, Atul, I've been in Bombay for the past 30 years.
Oh.
And I'm working with a private company. It's a textile company.
Which company, sir?
This is Raymond Limited.
Oh, that's a big company.
Yeah. And
Yeah.
I've been working there for the past 5 years.
Okay. So what's your role and responsibilities there?
I handle the entire Western Zone marketing operations.
Okay, so that involves a lot of traveling as well.
Yes, it does.
Okay, and who all are there in your family?
My family consists of my wife and my 4-year-old daughter, Akshara.
Oh, wow. So she's 4 years, that means she would be starting to go to school now?
Yeah, we just put her about a couple of months ago.
Okay, great, sir. In fact, one of my role and my
Okay.
key area of specialization
Uh-huh.
is to ensure that families' standard of living is protected, families like you.
Okay.
And that is the discussion which we are going to have today.
Uh-huh.
And before we move forward, I would like to reiterate the 3 promises which I made to you over the phone.
Uh-huh.
And the first promise is that I am not here to sell you anything.
Yeah.
The second thing is that in case you don't find any value in the discussion which we will have, then I will not bring it up further again
Okay.
unless you wish to do so. And the third promise is that if you do find value in the discussion which we will have, only then we will enter into a mutually beneficial agent-client relationship and take this forward. Is that fine with you, sir?
Yeah, that's fine. In fact, it sounds very professional from your end. Like the
Right.
reason why I gave an appointment was you mentioned to me that you're not going to sell me anything.
Right.
So, pretty good.
Right. Thank you, sir. So I would like to ask you a few questions in this regard. My first question is that I see you are maintaining a quite decent standard of living
Right.
for your family.
Yeah.
So what is the average amount you spend on a monthly basis to maintain this standard of living?
It should be approximately 45,000 per month.
45,000?
Yeah, 45,000 per month. Yeah.
Sir, I have an interesting presentation here which actually shows that what is the life insurance cover required by an individual who will want his family to get, say, approximately 45,000 rupees a month to maintain their standard of living.
Okay.
And in this tool, this illustration, we have taken 3 rates of interest into consideration.
Okay.
And when we are talking about these rates of interest, they are assumed to be the bank fixed deposit rate in the long term.
Okay.
So we are talking about 5%, 6% and 7%. So at a 5% rate of interest, if an amount of 1 crore rupees is available as the life insurance cover, that will help the family get approximately 42,000 rupees on a monthly basis. And if we talk about 6%, so it is going to be approximately 50,000 rupees in a month.
Oh, that's it.
So you see that the amount of life insurance cover which you actually require
Right.
in order to protect your family's standard of living, which you said that requires on a monthly basis 45,000
Right.
rupees, you will need a life insurance cover of approximately 1 crore.
1 crore life insurance, Atul.
Yes, sir.
I really doubt whether I'll be able to afford all this.
Well, sir, I totally understand. And in fact, affordability is one of the things which we at Tata AIA Life Insurance keep in mind
Okay.
when we are designing the solutions for our customers.
Okay.
So allow me to share with you an illustration where we have shown that what actually it will cost in order to get that 1 crore worth of life insurance protection cover for you.
Okay.
We have made the illustrations for age 30, 35, and as you mentioned that you are 32.
Right.
So the premium which we are going to talk about, your premium is going to be roughly around this.
Okay.
For a person aged 30, the life insurance cover of 1 crore comes at a small cost of just 12,600 rupees in a year,
Okay.
which translates to less than 35 rupees in a day.
Less than 35 in a day.
Yes, and
Is
this
it
is
really
for
possible?
age. Yes, sir, and this is for age 30.
Okay.
For you, the amount will be somewhere near this.
Okay.
So, sir, how do you feel about this solution?
Atul, I never thought 1 crore was, you could get a 1 crore insurance at less than 35 rupees a day.
Sir,
I've understood whatever you shared with me about the power of life insurance, and I really appreciate the way you've taken me through that. However, Atul, what I feel is I don't think I require insurance at this stage. You see, I lead a healthy lifestyle. I don't smoke. I don't drink.
that's great, sir.
And longevity in my family is there.
Oh, that's great, sir.
85, 90, that's there. And I
Right.
don't think anything is going to happen to me at all. So, I don't think I require 1 crore of life insurance.
Well, sir, first of all, thanks for sharing your thoughts with me. In fact, in these 3.5 years I've been with Tata AIA Life, I've got the opportunity to service more than 80 customers, and all of them had this same thought initially. And the thoughts are so common that our company has actually put them in the form of a tool, and the people believe that I don't need life insurance or nothing will happen to me. But at the same time, I would also like to share with you a study which was conducted by Swiss Re, which is the world's largest reinsurance company based in Europe.
Okay.
What they found was really shocking. In India, for every 100 rupee of protection requirement, only 7.4 is put into insurance and saving. So you see, there is a huge gap of 92.6% in India in terms of protection.
Okay.
And that is why India in the entire world has the third largest protection gap.
Okay.
And the basic reason behind this protection gap is that people believe, well, I'm leading a healthy life, nothing can happen to me. Or, like you said, my astrologer has said that, I am going to live long. But at the same time, there are stark realities.
Okay.
Today, in India, 1 out of every 4 person who's currently aged 20 will actually not live up to age 65.
Oh.
Every year in India, more than 6 lakh people die due to cancer, and there are 8 lakh people who are detected with cancer. In India, the cases of accidents have been on the rise, and according to a study, more than 1.3 lakh people die due to road accidents every year.
Okay.
Despite these facts, despite these realities, people still take chance with their life. People still believe that, well, I will not die, I will not suffer any disability, or nothing will happen to me. Or, like, I don't know what you're talking about. Insurance, I don't need insurance. Or my astrologer has said that I will live long. And that is the reason that there is a huge protection gap in India. Sir, at this point of time, I would like to ask you, what percentage of your family's standard of living you would like to leave on chance?
Percentage, I'm not going to leave anything to chance, Atul. I do not want to leave anything to chance.
Right, sir. I understand. And in fact, we all love our families and want to make provision for our family. We want to ensure that their standard of living is maintained.
Right.
So, sir, in that regard, have you made any provisions already?
I have got life insurance policies.
Oh, wow, that's great, sir. Would you like to know whether that is sufficient?
Yeah, why not? I would be interested in knowing.
Okay, so sir, here I would like to introduce a wonderful tool which has been designed by our company called Find the Gap.
Okay.
And which is a tool designed by our company which helps to calculate the exact protection gap, the life insurance cover gap which you require today in order to ensure that your family's standard of living is protected in your absence.
Okay.
It will only take 2 to 3 minutes of your time. So with your permission, I would like to proceed.
Yeah, why not?
Right. So I'll be asking you a few questions and we'll be doing some calculation.
Okay.
So as you mentioned earlier that the rough amount of money you spend on a monthly basis to maintain the standard of living of your family is approximately 45,000 rupees.
Yes.
May I ask, does this include the monthly EMIs?
No, it does not include the EMIs.
So if we include the EMIs, what is the total amount you spend?
See, EMIs, I'm paying around 20,000 per month.
Okay, so that makes it approximately 65,000.
65,000.
Right. So 65,000 is the total monthly household expense.
Right.
Out of which you said 20,000 is the EMI, which leaves us with 45,000 which you spend on the family expenses.
Right.
We'll try to calculate this on an annual basis, which gives us 5,40,000, which is the amount your family requires to maintain their current standard of living on an annual basis.
Okay.
Right. Now, sir, moving on, we are talking about protecting the standard of living of the family.
Right.
And hence, we talk about the guarantee. And you also mentioned that if we talk about the long-term rate of interest, which a bank fixed deposit will give us, it roughly comes to around 5%. So, for the 5% rate of interest, we have to now calculate what is that life insurance cover which you would need in order to provide your family with this 5,40,000 at a rate of interest of 5%.
Okay.
So in order to calculate that, we will divide 5,40,000 with 5%, which gives us a corpus of 1 crore 8 lakhs of life insurance cover requirement.
Okay.
Now, as you said that you have an outstanding loan,
Right.
so I'm sure you would not want your family to bear the burden of that loan in case of your absence.
Not at all. Why would they bear the burden? I don't want them to.
Sir, I totally understand, and therefore I would like to ask you that what is the total outstanding principal on the loans for which you are paying the EMIs?
Should be close to 18 lakhs. I think. Yeah.
18 lakhs.
Yeah.
So we'll add this amount to 1 crore 8 lakhs because
Right.
this is the amount you don't want your family to pay in case of your absence,
Right.
and therefore your cover comes up to 1 crore 26 lakh.
But I already have life insurance, I said. I told
Exactly,
you.
sir. That was in
Yeah.
fact my next question.
Uh-huh.
So how much sum assured you have from your current life insurance policies?
Approximately 10 lakhs.
10 lakhs.
Yeah.
So because you already have a cover of 10 lakhs,
Mhm.
what we'll do is we'll subtract this 10 lakh
Okay.
from the gross life insurance cover which we have calculated,
Okay.
and therefore the amount comes to 1 crore 16 lakhs.
Mhm.
Sir,
Okay.
this is the protection gap which you have today,
Okay.
and which, if covered,
Mhm.
will ensure that your family's standard of living is protected
Okay.
in the time to come, in
Right.
your absence come what may.
Oh.
So, how do you feel about this, sir?
Atul, it's been an eye-opener for me. In fact, many of the agents who met me in the past, they've never taken me through this kind of a calculation. And I'm really impressed by the way you have, helped me calculate the entire net life insurance cover. So what do you suggest? How do I proceed from here?
Sir, for that, allow me to take you through the features and benefits of an attractive and affordable term plan
Okay.
from our company, which
Okay.
is called Tata AIA Life Insurance, Maharaksha Supreme.
Hello friends. So how did you like the role play? I'm sure it must have given you a lot of confidence as to how to handle customer queries when you try to sell protection. It has been an interesting and a long day so far. We started with the concept of Mind the Gap. Then we moved to our new product, Maharaksha Supreme. Then we also discussed the aspect of how we can find the gap, calculate the gap, and we introduced the tool Find the Gap Calculator. I hope you found it interesting and simple. We also saw two interesting sales tools which will help you handle objections when you sell protection in the field. You saw the role play done by Atul and Ram, and I am sure it must have given you confidence that selling protection is possible and easy. But at the end of any training session, we'll always have a few questions in our mind. So there's no training session which can be completed without an FAQ. I have with me Vinod. Vinod is our zone head training for West Zone, and he has been through the session throughout the day, and he has captured a few questions which he thinks he needs an answer to so that he can explain to his advisors. Right, Vinod?
Absolutely,
So
Vijay.
welcome to the session, Vinod.
Thank you.
Okay? So I'm ready for your questions, Vinod.
Thanks, Vijay, for the valuable inputs. Excellent in terms of the product presentation. And I must tell you, before I ask you questions, this product is a fantastic product, and I'm very eager to have one for myself so I can safeguard my family's standard of living. Also, I want to recommend this product to my family and friends. And I wanted to ask you a few questions which could help me address their queries.
Absolutely. Go ahead.
My first question is, what is the right age that a person should start planning for life insurance cover?
Okay, so somewhere in the day, or many times during the day in fact, I have said that if there is an income, it needs to be protected.
Okay.
If there is an income, it needs to be protected. So when an income starts, the protection should start then, right?
Sure.
So protection should start when the income has started. And Vinod, what age do you think people start earning these days?
I think the age at which people start earning and begin their careers is at 25, 26.
And when they start earning at 25, 26, is it possible that they will have dependent parents and siblings as well?
Yes, they could
Very
have
much
brothers,
possible,
sisters, parents.
So isn't that the right age to start thinking about life insurance?
Sure.
One more reason why people should buy life insurance when they start earning. You know that the younger you buy a term plan, the cheaper it is.
Right.
So why wait?
Yes.
Just to give you an example, a 25-year-old guy, if he wants to buy a 50 lakh Maharaksha Supreme, the premium is only 6,700 rupees per annum, which works out to almost 500 rupees per month, right?
Totally.
I have always been a proponent of thrift. Do you understand the meaning of thrift?
No, Vijay, please enlighten.
Thrift means making small savings at regular intervals.
Sure.
Buying life insurance protection at an early age of 25-26 inculcates the habit of thrift in a young man,
Right.
which is so essential to build a good financial corpus as well as provide financial protection to one's family. So that's the right time to buy life insurance, or at least start buying life insurance.
You answered my question. I completely agree. And now we should start talking to people at younger ages so that they protect their family from a younger age and benefit from the premium.
Absolutely.
In the training, when we are going through the presentation, there's a lot of emphasis and the way it was projected, and it is a fact that the product has good competitive rates. How do we approach our customers who have got a term plan with the Maharaksha Supreme?
Very interesting question, right? Go back to the first session in the day. What was the first session? Mind the gap.
Absolutely.
And then we said that everyone in India has a huge protection gap. We have a gap of 92.6%. In all possibilities, everyone who has a term plan still has a gap.
Sure.
And the gap, I can guarantee, in most cases, would be higher than the current life insurance protection.
Okay.
So the first thing one needs to do is to go to your existing client who have a term plan and calculate the gap. Once you calculate the gap, the first thing you need to do is sell a new life insurance Maharaksha Supreme to cover that gap. He may insist, I want to buy one plan for my old cover as well as my new cover. It's possible. He may insist. That's your question, right?
Yes. I have another question leading to that. One person who has got a existing cover, then there is a gap cover. So now existing cover could be the product he already has. A gap cover can be solved with the new Maharaksha Supreme.
Absolutely.
Can a customer combine into one plan and buy one Maharaksha Supreme?
Okay, I'll ask you a question. Do you see any difference between Raksha and Maharaksha?
I think yes, the rates and the terms.
Okay. There's one major difference between Raksha and Maharaksha.
Okay.
Raksha is an aggregate rate plan
Okay.
and Maharaksha is a segregate rate plan. Let me explain.
Okay.
Don't get confused with the word aggregate and segregate. Aggregate rate means there is one rate for smoker and non-smoker. That's Raksha.
Okay.
Maharaksha has a segregate rate. That means smoker rate is separate, non-smoker rate is separate. A plan which is on the aggregate rate and a plan which is on the segregate rate, that means there will be a requirement of fresh underwriting.
Absolutely.
Okay? When you bought Raksha, your health condition and your financial condition was at that point in time. It may have changed.
Yes.
When you buy Maharaksha and your health condition has changed, please remember, you will have to go for underwriting. If you have to go for underwriting, it may be possible that because of change in your health, the underwriting requirements will be different to what it was for Raksha.
Okay.
Maybe you got that at ordinary rate.
Sure.
Would you like to take that risk?
Yeah, I mean, he'll lose out on that cover otherwise.
Therefore, such an advice should be only given to such clients who have maintained their health absolutely at the same levels which it was when they bought Raksha. Friend, please remember, no one has adequate life insurance. Let us first think of protecting the gap instead of just merging Raksha and Maharaksha. In trying to do that, let us not forget the main intention.
Vijay, another thing which is coming out is that with female lives, the rates are preferred. And why is this?
Why do you think it will be? I'll tell you why. World over, the female mortality experience is better than the male mortality experience.
Okay.
If the female mortality experience is better, it should be transferred, that benefit should be transferred to female lives.
Sure.
And therefore, that benefit has been transferred to female lives in this way.
So that means we can approach all the women in India.
Absolutely. But with one condition, remembering one condition.
Okay.
What is the purpose of a term plan? The purpose of a term plan is to protect income. Women who have income are absolutely equally eligible for this plan, just like men. Please also remember that Maharaksha Supreme is a self-proposed plan. You understand the meaning
Yes,
of
sir.
self-proposed?
Proposed is that you.
That means you have to propose
Yes,
on your own.
on
life.
your own.
Therefore, it can be very well proposed on the life of women who have an income. However, housewives can't be covered under Maharaksha simply
That
because they
clears
don't
my
have an
doubt.
income.
That clears my doubt.
Any other question?
Another common query which comes out from the distribution is, can we convert this plan into a profit making or a savings plan, our current products?
To answer the question in simply one word, the answer is no.
Okay.
But you need to understand why it's a no. First of all, this is a pure protection plan. India has huge gap. The problem is that this huge gap exists because of a savings mentality and overseeing protection in favor of savings. I do not want people to convert their protection plan into savings.
right.
Because when they convert their protection plan into savings, they are doing two things. They are reducing their
Reducing.
protection. They are converting into savings, and when they convert into the savings, the sum assured won't be the same, right?
Right.
These two needs should be kept separately.
Okay.
Saving should be a savings need,
Protection.
protection should be a protection need. Let's not mix the two.
Vijay, what are the underwriting norms if the policy is lapsed and a person then takes an action to revive it? What is the process in that?
You're talking about reinstatement, right?
Yes.
Okay, reinstatement, Vinod, in life insurance is a fresh contract. And why it's a fresh contract? The conditions may have changed from the time of taking the policy to the time of reinstatement. In Maharaksha in particular, you have smoker and non-smoker rates.
Right.
Is it possible that when someone took the policy, he was a non-smoker?
Could be yes. And you would
At the
have got
time
some-
of reinstatement, he became a smoker?
Yes, possible.
His health condition changed?
Yes.
His financial condition changed?
Yes.
So reinstatement will be subject to fresh underwriting. So you have to keep that in mind, and therefore I always advise, don't ever think of lapsing your pure term cover.
Okay.
That holds good for all life insurance cover, but even more so for a pure term cover, because you got a cheaper rate at a younger age when you were healthier. Keep that policy in force and that cover alive.
Fantastic. After there's so many beautiful things in this product, I think one thing which comes out very good in this product is that there is a good term now. It's a good extended term.
10 to 40 years,
10
right?
to 40 years.
Yes, yes.
So how does a person choose his term in this product?
Very interesting question, because I think we did not cover it throughout the day, right?
Yes.
Okay. Very important for everyone to know. There are 3 conditions to be seen. First condition, what is your retirement age? Okay.
Okay. All right.
Second condition, when is your loan being repaid?
Right.
Third condition, when is your youngest child settling in life? Of these 3, whichever is the furthest, your term plan's period should be equivalent to that.
Okay.
Do I answer the question?
So we have to take the highest and the most
highest
important
of the
one.
3, yes.
Fantastic. I think Vijay, these doubts and questions which I had have now cleared, and
Okay.
it will be very good of me and the team to go out and present this to the customers and our distribution so that I can successfully sell this product. Just going further, Vijay, and as you are aware, in India we are so tuned to savings for our child's future.
Yes.
And our primary priority is always child's goal. कि what our child हो बड़ा बन के क्या करेगा.
Okay.
And as you are aware, and we have a fantastic product which is Gyan Kosh, which is so focused on child education. And now you have given us a super product which is focused on income protection, standard of living, which is the term plan. Can you suggest if we can have a combo with this product?
Wow. You have been thinking about that.
Yeah, I mean, if it solves both the needs, so why not present it to the customer together?
In fact, you will be surprised to know that if you had not asked this question, I was about to present to you a combination tool of Gyan Kosh plus term. You remember we launched this tool when we launched Protection is Wealth as a training
Yes,
program?
yes, sir.
Now with the launch of Maharaksha, we have improved this tool by adding a choice between Raksha and Maharaksha.
Okay.
Plus Gyan Kosh as a combination, a ULIP plus term combination. Gyan Kosh will take care of child's financial goal. So you have a financial goal for your child.
Absolutely.
To fulfill that dream, you need a ULIP plan where the corpus is will
Yes.
as well as the child's dream is protected.
Okay.
And you have a term plan to protect the standard of living of the family.
All right.
we have developed this combo tool, and if you have time and if you come to my room, I can show you this tool.
No, sure, Vijay, I want to take it forward immediately.
Would you like to have a look?
Yes.
Let's go to my room. So Vinod, you wanted to understand the new term plus Gyankosh combo tool, right? Okay. Now this solution has both Raksha as well as Maharaksha. Okay. So how does it select? If the sum assured is more than 50 lakhs, it selects Maharaksha.
Okay.
If the sum assured is less than 50 lakhs, it selects Raksha. Okay.
Protection is shown.
Absolutely. So there are two aspects of this tool. I'll explain each aspect. Okay. This tool covers two important needs of a client. You said child is the most important need for any parent in India. So it covers child's education and marriage need through Gyankosh. And it covers the need for protection of family standard of living, which we have seen, right? Term plan.
Yeah.
Pre as well as post retirement.
But Vijay, why pre and post for standard of living?
Okay, a very good question. If someone dies, the family, the complete unit needs protection
Right.
till the children are settled.
Sure.
So normally children settle by the time you retire.
Absolutely.
But post retirement, if someone dies, the spouse is still alive, right?
You take care of himself.
She will still live maybe 25-30 years,
Yes.
or he will still live 25-30 years.
Yes.
Don't you require protection for that also?
Absolutely.
That's why this calculator takes the pre as well as post requirement need for standard of living protection and calculates a single sum assured.
Oh, very good. Very good.
Okay? So I'll take you through the data collection sheet, which is the first sheet, and then I will show you the result sheet. Okay? In the data collection sheet, the tool has three parts. The first part, as you can see, is client's personal details. The second part is information for child's dream protection, right? Because child's dream protection.
That is the one part of it.
And the third part is the information for protection of family standard of living, pre and post retirement. Okay? The best way to understand this tool is, I will do this tool assuming you are my client.
Oh, good. Very
Okay?
good.
So we will run this tool assuming your children's need requirement as well as your protection need requirement. So you'll also get an idea in the process how to use this tool. Okay, the first question which I will ask is absolutely your name. So I know your name, so I'll feed in Vinod Khemani. Okay? So Vinod, what's your age in completed years?
44.
44. Now you see there are two kinds of cells.
Yeah.
One is green and the other is grey.
Yeah.
In the green cells, you can type.
Oh, okay.
In the grey cells, there is a selection drop-down menu. Can you see this?
Oh, so it can give
So you should not type in.
okay.
So your age is?
44.
So you can straight away go and select 44 here.
All right.
Okay? So you don't need to type it. Green cells you need to type. What's the normal expected retirement age, Vinod?
I think 58 would be
58, right? So this is a green cell, so you have to key it.
okay.
Okay? Okay? So your retirement age is 58, okay?
Okay.
The next question I have is, number of years post-retirement for which protection of standard of living of dependent needs to be planned for. That means your wife Vaishali,
Right.
how long post your retirement and post her achieving say 60 years, you want to make sure that money is available to her to maintain her standard of living come what may.
Okay, 60 plus 30. At least we should plan till age 90.
Till age 90?
Yes.
So yours is 58.
Yes.
So I am taking as 30 more years.
Yes.
Is that fine?
That'll be good.
Okay. So gender male.
Yes.
Now, you're a smoker or non-smoker?
Why is this question? Smoker, non-smoker? How would, yeah, because of the benefit in the product.
Maharaksha?
Yes.
You remember your
Yes.
smoker and non-smoker rates?
So it will calculate and
As per that
alright,
rate. So
okay.
you're a smoker?
Non-smoker.
Okay, so I've taken non-smoker rate. So these are your personal information. That's the first part. Now let's go to the second part. Information for child's dream protection.
Okay.
So you have a son, I understand,
Yes.
right? What's his name?
Viraj.
Viraj. How old is he?
He's completed 8 years.
8 years.
Yes.
Okay. So what do you want Viraj to be?
Viraj's dreams is to become an actor.
Really?
Yeah, so as a family, we have a joint dream.
Okay. So for acting also, you would need to send him some acting school.
Absolutely, that's in mind, and we wanted to send him to London for 3 years.
London? For the acting school?
Yes.
Okay, so that must be very costly.
In the present, yeah, it's around 5 to 6 lakhs in a year.
5 to 6 lakhs in a year.
Yes.
And how long is the course?
It's a 3-year course.
So if you send him today, the cost would be what, 15 to 18 lakhs?
Yeah, 18 lakhs at least.
So that's the next question. Money needed for child's education and or marriage in today's term. Because you can't know what will be the value of that education when Viraj is 20 or 22, right?
So we have to look at the value of the cost of as of today's.
As of today, always, okay, in financial planning. So you said 6 lakhs per year,
Yes.
3 years course,
18 lakhs.
so 18 lakhs. So should I take 18 lakhs?
Yes.
Okay, in any planning, we always want to know if you have already saved some amount for this course.
I think we have managed to save 5 lakhs for him.
5 lakhs?
Now, yes.
So should I say 5 lakhs here?
Yes.
Okay. You will require this money when he is 18.
20.
20.
20, yes.
So 8, 20 means you need the money after 12 years.
Absolutely.
So here you have to go and select the number of years after which you need.
Oh, so there are a number
12
of
years.
years also. Okay.
Okay.
Very good.
So now I will help you plan for Gyan Kosh plan, which will give you the desired amount after 12 years.
For the education.
Of,
protection.
yeah, 12 years. Okay. The next question is, naturally, in any financial planning, you have to plan as per the inflation.
Sure.
So what is the long-term inflation rate you expect?
I think, Vijay, it will be around 6 to 7%, 6%,
So should I take 6 or 7?
6%.
Okay. So I'll take 6%. Now you know the second question which I asked you since morning we have been repeating
Yeah,
so.
yeah.
What is the long-term fixed deposit rate you expect?
I think for that also 6%, Vijay.
6%. Okay. The inflation rate and fixed deposit rate or long-term interest rate cannot be the same.
Why is that?
Simple first reason. In any economy you will find that the interest rate is always higher than the inflation.
All right.
Okay? Otherwise the economy just won't grow, right?
Okay.
In India, we generally see that the interest rates are around 2% higher than the inflation rate, okay? If you have these two as same, the value won't come
Okay.
because the money just won't grow, right? Both
Yeah,
are
it will
same.
be at the same level.
So, if you are assuming the long-term inflation rate to be 6%, what should I take as the long-term fixed deposit rate?
Take at least 8%.
8%? Okay, I'll take 8%. So here we go and select 8%. So we have covered two parts of the data collection sheet.
Personal details.
Personal details
And child
and
protection.
child stream protection. Now the third part, which is the standard of living pre and post retirement. Okay. So for this, you know, since morning we have been asking this question. What is your current monthly household expense?
I think it's 50,000.
50,000. The green field, so you have to key
You
in.
have to key in. All right.
The next question is, what percentage of this monthly household expense you would like to secure to maintain the standard of living of your family pre-retirement?
At least 75%.
75%? Do you think that would be enough?
If yeah, if the loan.
Are you saying that
down-
25% of your expense is yours?
Okay, so we need to plan a little more higher.
Because why are you planning? God
So that-
forbid
so that
something
other-
happens to
other
us,
things also can happen.
happens to us.
Yeah.
What is the expense of the family is available. I generally recommend to clients for pre-retirement 100%.
Oh, okay.
The reason is very simple. Our personal expenses are not major.
Right.
Plus there would be inflation.
Right.
Huh? Should I take 100%
Yeah,
or
100%
80%?
is okay, yes. the plan.
Post-retirement, what percentage of this 50,000 you need to protect for your family standard of living?
I think that 75 to 80% is fine.
75 to 80? Should I take 75 or 80?
75 is good.
Okay. Do you have any outstanding loans?
Yes,
So give me the total value of all your outstanding loans
I
today.
think 10 lakhs.
10 lakhs, okay. So I'll key in 10 lakhs here. Life insurance cover taken exclusively to cover the loans. This question is basically when you take a housing loan, people don't give you a housing loan till you have a life
Yeah, yeah,
insurance
right,
cover, right? So, but you have not got a housing loan.
It's a personal loan.
Do you have taken exclusive
No, I
life
don't-
insurance
no,
cover
this
for
is
this?
not, nothing, I don't think it's secure.
So no loan cover.
I have got a cover otherwise, but not specifically
Not for
to
loan.
product.
That I'll ask the next question.
Sure.
The next question is, existing life insurance plan sum assured other than cover for loans mentioned above. What is the total sum assured under all the life insurance policies you have put together?
I think around 20 lakhs.
20 lakhs you have?
Yes.
Sure.
Yes.
So here we'll go and type 20 lakhs. So now we have taken all the information. So let me review the information. Now in the calculator you'll see a button called run macros.
Okay.
Okay? Before you start using this calculator, you have to ensure that you have enabled macros on your Excel.
Oh. We have to educate our people to
Yes.
do that.
If the macros are not enabled, this sheet won't run, because when you press run macro, the entire calculation happens. What is the first thing it does? It selects whether you are eligible for Raksha or Maharaksha,
Yeah, you have
depending
said
on the sum assured you have. Then in the background, it calculates the premium of the term plan and the Gyan Kosh plan for your children's name. Okay? So now I'll press this macro, run macro. You saw? There was a calculation going on in the background. Now the plan which it has selected for you is Maharaksha.
Oh, so
What does this mean?
that means it's the new product and think longer term. Could be.
No. It means that the sum assured requirement is above 50 lakhs.
Oh, it's higher. So it's already I'm in a requirement.
Yes. Now, you said that your number of years left for retirement is 14 years.
Right.
Okay? You said that Viraj has to go for education after 12 years.
Yes.
After he comes back from London, he will be a new actor.
Yes.
You will still need to support him.
Sure.
How many years do you think you'll have to support him?
So 44 plus 25, at least till age 70.
At least till
Age 70.
age 70, which means 14 plus 10.
10, 24 years more.
Huh?
Yes.
So you need a plan for a term of at least 25
24,
years.
25 years, yes.
So I'll select 25 years as your Maharaksha term plan.
Right.
Many people say, no, I want only till retirement.
But there are
But your responsibilities are not ending at retirement. Your responsibilities are ending with Viraj settling down in life.
Yes.
So you have selected a safe term. Before 25 years, if Viraj settles down and there is no other fear, it's a different question. But it's better to take protection. And you're already in your 44. Cost will only increase.
Sure.
Okay? So now we have run the macros. Okay? Now let's go to the result sheet and see what this calculator is showing. Part 1 of this result sheet shows you the results of your child's goal and what amount of Gyan Kosh you need.
Okay.
Okay? So the first thing it says is corpus required for your child's goal after 12 years. See, you said 12, na?
Yeah, absolutely.
It says that you will require 26,15,855 rupees for your child's goal when he goes to the London School of Acting when he is 20 years of
This
age.
is factoring inflation and
It is factoring inflation and it is reducing your existing savings.
yeah.
So it is inflating your savings also and it is inflating your requirement also. And the difference between the two, you still need 26,15,000 to plan for Viraj's education in London School of Acting.
Because it's saying the net of existing.
Yes.
bills. Okay.
The annual premium of a Tata AIA Life Gyan Kosh policy for term of 15 years to generate the balance corpus of 26 lakh after 12 years is 1,67,636.
I have a
You're not
question.
asking me a question.
Yeah, I just had something in mind.
This is 12.
Right.
Gyan Kosh is 15.
Yeah, so how will this amount, target amount be built?
So this calculator has this benefit. If you do a sales illustration of Gyan Kosh, will you get a result for 12 years?
No, it will be a 15-year plan.
Minimum
and this is
15-year
your
plan.
maturity and
This calculator is calculating what will be the corpus of Gyan Kosh at 10%, assuming 10% SIA, at the end of 12 years.
So I know my amount, whatever balance is left, I get it.
You can withdraw after 5 years,
years,
na?
yeah, okay.
Huh? Partial withdrawal is allowed.
Absolutely.
So if your son has to go to London, after 12 years, Gyan Kosh will generate 26,15,000 if you pay a premium of 1,67,636 every annum.
Right.
That means every year. Okay? Death benefit, that is sum assured available on death during the term of the Gyan Kosh. Gyan Kosh will also have a death benefit.
Yes.
The death benefit available in this plan, it has calculated, is 25 lakhs 14,000.
So that means I think the education is protected from
Almost
day one.
protected, no?
Okay.
There is still a small difference. I'll cover that later.
Okay.
This is 25 lakhs. This is around 26
very-
lakhs. There is a difference of 1 lakh.
Yeah.
But we will cover that also.
Okay. All right.
When we come to the term
Okay.
solution.
All right.
If this policy continues for 15 years, if you do not withdraw the money, it will be 40 lakhs 57,000.
That means if there is any change of plan also, I'm getting 40 lakhs after 15 years of Viraj's completion, even if there is a change.
Even if there is a change in plan.
All right. Good. Very
Okay.
good.
And let's not forget family income benefit.
Okay. That's a
You know Gyan Kosh?
yes.
It has two types of options. This combo calculator only calculates benefit assuming that you have opted for security net benefit. Waiver of premium ensures that God forbid something happens to you, the premiums are waived.
You only get the amount at the maturity.
But you will get the amount at the maturity.
Yes.
You have got a sum assured which may get used for other reasons. Here is an additional monthly income equivalent to 1% of the sum assured,
Very good.
so that your child's education on a regular basis also does not suffer.
Okay.
Therefore, I do not recommend anything but a combination of these two.
There is an above and over benefit for 8 years.
So you have understood the solution? So
very
you like the solution?
Very well.
Now let's look at part 2, which is protecting standard of living
Yeah.
pre and post retirement. So what is the first thing? You have said your annual family expense.
50,000.
You said it's 50,000, so it's 6 lakhs. Okay. Second thing you said was you required to protect 75% of 50,000 for post retirement standard of living of your dependents,
Correct.
right? Which
Correct.
comes to 37,500.
Right.
While 37,500 is required in today's term, your retirement is 14 years away.
Yes.
Will it be same 37,500?
No, it will be more, as how you explained.
We have to inflate it, right?
Yes.
So 37,500 is inflated,
Yes.
and based on that, the inflated value that requires protection is 10,17,408 per annum. This is the amount required for child's gold less sum assured of Tata AI Life Gyan Kosh. You know there was a difference?
Absolutely. That 1 lakh.
25 lakh,
And one. Yeah.
14,538
So that is also
is the sum assured.
pulled in and
So that also difference is accounted for here. So what is that difference?
1 lakh.
1 lakh 1,370. Now you can say, why this is such a small amount, why are you accounting for it? The reason is, if there is a death and Gyan Kosh sum assured is paid, we want to protect the full goal from day one. Why? Because you require the money after how many years?
After 12 years.
And the policy will give you money only after 15 years after death. You know, na, in
Yes,
Gyan Kosh?
yes.
So if you need the money at 12 years, you need it fully protected.
Yes.
You don't know when death will happen.
Sure.
Therefore, the full value is to be protected, and therefore
The
that
1 lakh is
balance
accounted, yes.
also we want to account. So all these requirements, now the calculator will calculate how much of term insurance you require. So the first value, which is at D, you read the column D.
Yes.
Additional life cover required, including 1,01,317. It is saying C. C is 1,01,000.
Yes.
Required as on date, today, if
Yes.
something happens, to maintain standard of living till retirement, should then generate desired monthly income at FD rate of 8%. You have selected that?
Yes.
The corpus is calculated using capital depletion method. That is, the corpus will be sufficient to provide the regular monthly income at the rate of 50,000 till retirement age to protect family standard of living. The sum assured for that is 52,59,689.
But what is this capital depletion method, Vijay?
There are two ways we can calculate the capital requirement. One is capital depletion method. So here, whatever is the capital, it assumes you require 50,000 till age 58, right?
Right.
Pre-retirement.
Right.
This capital will generate that at 50,000 rupees every month till 58. After that, the corpus will become zero.
Yes.
Therefore, it's called depletion method.
Depletion method. Okay.
In the other method is capital conservation method.
Okay.
That is the simple rule which we taught during Find the Gap.
Yes.
Remember Find the Gap tool?
Absolutely.
That was capital conservation method. There, Whatever money you put in the FD is protected.
you get interest.
You are only getting interest.
Interest,
So
right.
that corpus is intact.
Yes.
So that sum assured requirement will be higher.
Yes.
Okay. The second is life insurance cover required as on date again to maintain standard of living post retirement to generate monthly income. What was the monthly income? 37,500, right?
Right.
At the rate of 6%, it is inflated. This monthly income, when you are 58, from 37,500 becomes 84,784. Is that clear?
Yes, clear.
This is the impact of inflation.
All
Please
right.
understand it. Okay? The sum assured required to generate this amount every month is 40,66,553.
Okay.
This amount, it is assumed upon death, will not be spent. It will be invested so that it grows till retirement.
Right.
And from retirement, you will start withdrawing from this fund
Right.
to generate 84,784 per month.
Correct.
Is that clear now?
Correct.
So the total is and a combination of these two?
Yes.
So the total life insurance cover required so that your family standard of living is maintained pre 100%, post 75%, plus the shortfall of your child's good 1 lakh.
Correct.
So the total amount comes to 83,26,242. This is taking into account your existing life insurance cover of
20 lakh.
that has been reduced. Now we come to the real thing. What's the premium? So you must be wondering, 83 lakhs premium must be a bomb, right?
Yes.
That's the beauty. The premium comes to 30,966 only per annum.
All right.
Isn't that very
Fantastic. Fantastic.
30,966 ensures that 83 lakhs 26,242 rupees is available to your family the day you are insured.
Okay.
Okay. So let's look at the final values. The premium which you required for Gyan Kosh was 1,67,636.
Correct.
The premium you require for Maharaksha Supreme is 30,966. The total is 1,98,602 is the annual commitment required
Right.
for a complete package
Yeah.
that will ensure Viraj is fully protected in terms of his education needs.
Correct.
Your family is fully protected in terms of standard of living both pre and post.
Right.
And the monthly commitment works out to only around 16,698 rupees.
Correct.
With this powerful tool, don't you think our agency force can convince anyone to buy this combo?
Sure, because that was my question at the beginning and it's, I think, answered.
So now, do you feel confident that you can in turn make all your agency managers, all your agency trainers and everyone in agency understand this tool by taking them through it?
Absolutely, and I think we'll do a service to ourselves as well as a more important service to the customers, where education and standard of living both is protected in one go.
So Vinod, while you have understood this tool, I ask my friends all sitting and watching this presentation right now to please take this tool and practice.
Sure.
Because if you don't practice this tool, Vinod has also not practiced, I have done it, but I am sure he will
And
practice.
I'll pick it up.
You also need to take this tool. Your trainer will give you a CD, load it on your laptop, and please start practicing and going out to your clients and making a wonderful combo solution that will cover your clients' children's need as well as their standard of living requirement. So, Vinod,
Thank you very much. It was excellent. If this can be worked like a Gyan Kosh and Maharaksha, can Flexi and Maharaksha also be offered as a combo?
why not? And since you have asked, I am happy to inform you that we have just finished working on the Flexi plus term combo as well.
Oh, you're ready with that too?
If you have time, I can take you through it.
Sure, I mean, it's done so much, why not this?
Okay, so Vinod, this is the second calculator which we have developed, and this is a combination tool for selling IA Flexi Supreme with Raksha and Maharaksha as the term option for protecting standard of living.
Correct.
The calculator is very similar to Gyan Kosh. There are a few differences, so I'll explain the differences. First of all, when it comes to children's need, you should only use the Gyan Kosh plus term combo.
All right.
The reason is very simple. Gyan Kosh is meant for protecting child's goal. It has inbuilt waiver of premium. The purpose is that with the waiver of premium, while the death benefit is available, the maturity benefit is available as per the planned goal age of the child.
All right.
So there is no disturbance in that goal, which is not possible in Flexi or any other ULIP product.
Okay.
So for any other financial goal, other than children's financial goal, we should go for Flexi.
Right.
There is another way where Flexi can be used, and beautifully. Flexi can be used as a wonderful corpus building tool. Corpus building tool is best used for building a retirement corpus.
Okay.
People keep saying that we don't have a retirement product. Retirement product is required for building a retirement corpus.
Absolutely.
Okay? So if Flexi can be used for building a retirement corpus, it is a wonderful product. So this tool will give you two options. Plan with Flexi for any financial goal other than children's goal,
Right.
and plan for retirement goal. So this calculator has two parts.
Goal and retirement.
Okay?
Got it.
So the first sheet is very similar to the Gyan Kosh sheet. So I'll just take you through it. So we will do two things. First, we will plan for any other goal other than Viraj's goal of education. And the second thing, we'll plan your retirement
Right.
using this tool. So the first goal. So your name. Now, information for securing financial goals or creating corpus for retirement planning. So if you look at this need to be planned for, it has two options: securing financial goal and retirement planning. So we'll select securing financial goal. Can I understand which financial goal you want to protect?
I think first is to build a corpus for a property of 75 lakhs.
75 lakhs.
Yes.
You want to buy another house?
Yes.
So you require 75 lakhs in today's value for your second house,
Yes.
right? And when do you want to buy it?
I think in the next 14 years.
Have you saved anything for this goal?
Yes, Vijay. We have saved around 8 lakhs in the family.
8 lakhs in the family.
Yes.
So for
So
Viraj,
minus Viraj's.
you still have 8 lakhs.
8 lakhs.
So for Viraj, it was 5 lakhs, and for this goal, you have saved
8 lakhs. Yes.
8 lakhs. And number of years after which you require this amount, you said you require it when you retire, right?
Yes.
So which is 58, which is 14 years hence.
Yes.
And expected long-term inflation rate, you had said 6%. So I'll take the same.
Yes.
And expected fixed deposit rate, you had said 8%?
yeah.
8%.
8%.
Okay. Now, the same requirement, protection of family standard of living pre and post.
Yes.
So current monthly household expense will be the same, right?
50,000, yes.
50,000. So just like in that case, we have to run the macros.
Run and enable macros. Yes.
Okay, so you should have enabled macros.
Right.
You run macros, see the
Oh.
calculation.
It's full out.
Okay, and we had said what is the term of Maharaksha you need. So you had said
20, 20, 25. We went
25.
with
So we'll take the same thing.
Yes.
Okay, now let's look at the result sheet. What does it say? So you require a corpus, the corpus of 75 lakhs for building your second house. The value of that corpus would be 1 crore 51 lakhs 48,057 rupees
At the time
when
of
you
retirement.
retire. The premium, annual premium, under IA Flexi, which will give you this corpus at the end of 14 years. You know the minimum premium term is 15.
15. So
At the end of 14 years,
You can
the premium is 6 lakh 1,529
in a year. Because
per
of-
annum. The fund value at the end of 14 years will be the same, 1 crore 51 lakhs 48,000.
At 10%.
Death benefit, the cover is, the premium is,
6 lakhs.
so 10
Yeah,
times
10
cover.
times
So
cover.
we have taken the minimum cover
Yes.
so that the corpus can be built,
Yes.
and the balance cover will be given through the term plan.
Yes.
Fair?
Yeah.
So the projected fund value after 15 years, there is a slight difference. 1 crore 70. So if you don't need the money after 14 years, after 15 years, you'll get 1 crore 77 lakhs 30,394 rupees.
All right.
The second part is the same standard of living calculation,
Yeah, again you have
which we did. The annual family expense you need protected is the same, 6 lakhs. That doesn't change, right?
That doesn't change.
Similarly, the annual family expense post-retirement which you need protection, we discussed, has to be inflated.
Yes.
So as per inflation, that amount becomes 10,17,400. So the amount required for goal less sum assured of Tata AI Life Investor Show Flexi.
Okay. Right.
Because see the difference.
There
You
is
have 1 crore
151
51 lakhs
and then
and the cover is 60. So there is a difference of 90.
Yes.
So that goal needs protection. No?
Absolutely.
You want to make sure that
The
the
house
house
happens.
can be bought for Viraj and your
when he
wife.
comes back and all that.
Huh?
Yeah.
Right? So the cover required is, the total cover required, the difference is 91 lakhs 32,764. So the additional life insurance cover required, including this 91 lakhs, to maintain your standard of living pre-retirement.
Right.
That comes to 1 crore 42 lakhs 91,136.
Okay.
The sum assured that is required to be taken to protect the standard of living post-retirement comes to 40 lakhs 66,553.
Okay.
So the total insurance cover required plus the total outstanding loan minus the existing life insurance cover comes to 1 crore 73 lakhs 57,689 rupees. Because your goal amount is higher here. Second house is costlier.
Sure.
Right? Now let's see what's the premium for the Tata AI Life Maharaksha Supreme for this coverage of 1 crore 73 lakhs 57,689. It comes to only 60,655 per annum, which is just 5,000 rupees per month. So the total premium which you have to pay annually for your complete protection of second goal and standard of living comes to 6,62,184 rupees, which translates to just 55,463 rupees per month. Wonderful tool, right?
Absolutely. Like when I bought the house.
So I'll save this tool for you so that you can practice on it with your advisors as well. So let's do the retirement one. Now the same thing, the only change I have to do is need to be planned for.
Oh yeah.
I have to just do
My retirement
planning. The questions will change.
Okay. Got
Okay.
it. Got it.
The first question which I want to ask you regarding retirement, what is the desired income per month post-retirement in today's value?
Right.
That means what income will you need post-retirement, assuming you retire today, per month?
Would be at least 40,000.
40,000. Now you have already made some savings for retirement, right?
Yeah.
Any idea what is the value of all those savings today?
Is 19 lakhs.
So you have 19 lakhs already in today's value, right?
Right.
Now the same question which I asked earlier, how long do you want the income for your spouse? Now I'll ask, how long do you want this income post-retirement for yourself and your spouse?
I think 30 years planning is the minimum.
30 years?
Yes, because we both have to factor our lives after age 58.
I'll put 30. So the long-term inflation rate won't change, 6%.
Yeah, you told that should be higher also.
And expected long-term
FD
fixed
rate
deposit rate,
should be
8%. So the other informations regarding your family standard of living won't
That's
change.
already clear.
But since we have changed some figures, you'll have to run the macros again. Now when you have run the macros, the term of Maharaksha also doesn't change.
Absolutely.
Okay. So now we'll go to the result sheet and see as to what it throws up in terms of the requirement for your retirement. Okay.
Sure.
Okay, so you said that you wanted in today's value 40,000 rupees per month post your retirement, right?
Correct.
And we have seen that when we inflate this, it comes to 90,436 rupees per month.
Right.
You have also said that you want this for 30 years post retirement, right?
Right.
So the first line here, part 1 of the calculator shows the corpus which will be required as on the date of retirement that will generate a regular retirement monthly income of rupees 90,436 for the next 30 years.
Correct.
Okay. The second row gives the annual premium that you will require to pay under Tata AI Life Investor Show Flexi Supreme, so that the retirement corpus which is mentioned above is available to you after 14 years. This here shows the death benefit available under the Flexi plan. which is 10 times the annual premium.
Perfect.
Okay, and the last row here before we go to part 2 gives you the projected fund value under Flexi Supreme after 15 years at 10% SIS.
All right, Vijay.
Okay, now let's go to the second part of the calculator, which gives you the sum assured required for protecting the standard of living of your dependents both pre and post retirement. This is very similar to the earlier two tools, so I am not going to repeat. The figures are self-explanatory. You need to only remember one thing, that in the total sum assured requirement here, we reduce the sum assured of the IA Flexi plan because you have to remember that a retirement goal does not require sum assured.
Right.
So this sum assured available under the Flexi plan is reduced from the sum assured requirement for protecting the standard of living pre-retirement. So now Vinod, you have seen both the tools.
Excellent.
Gyan Kosh plus term,
So we are taking care of both the things
Flexi
which
plus
we-
term. Gyan Kosh can take care of children's need, standard of living. Flexi can take care of any other goal, retirement goal, plus standard of living.
Okay.
So do you have any other questions?
I
on
think
this?
this is good, and you said you can give me this.
Yeah.
Yeah, just a little doubt, and as we have a big distribution force, everybody doesn't have a laptop or access to a laptop or a PDA or anything. So how do we propagate this and take this forward?
Let me ask you a question, a counter question. If you go to a client who will understand this tool and appreciate his complete need-based financial planning, will he have a computer or laptop at home or office?
Sure.
Okay. So worst case scenario, if I don't have a laptop, I have the CD, I can go to his house, put it on his laptop and show him the calculation.
So it's permissible for us to load a CD and give it to him, give it to the advisor.
Yes, you should give it. Otherwise, how will they use it?
Yeah, how will they use it? Right.
But you have to remember one thing. This is a combo illustrator. It does not replace the sales illustration. This also does not give the exact value of premium. It may be slightly here and there. Okay. So based on this calculation, you should ultimately come back to office,
Make
take the
illustration
SIS
and then go back.
and go back to the clients. This is to demonstrate to the client how his financial goals can be met with Tata AIA Life wonderful products called Gyan Kosh, Raksha, Maharaksha Supreme and IA Flexi Supreme.
Very good. So with Maharaksha, I think we can get our other two products also going very well with this combo.
So my training team, you're confident, is geared
Absolutely,
up to teach these tools.
Absolutely, no difficulty.
So friends, now you have two tools. You have to ensure that you practice both these tools before you go and meet your clients. With this, we end today's interesting session on Mind the Gap. So what we have covered? We have covered Mind the Gap. We have covered the new product Maharaksha Supreme. We have covered how to find the gap. We have seen two new tools to sell Maharaksha Supreme and counter objections. We have also answered FAQs. We have also seen the new Gyan Kosh plus term combo. We have seen the Flexi plus term combo. Now with so many tools and armory, please go and meet your clients. All the best and happy selling.